Companies across Europe are growing concerned about the effects and likelihood of cyber attacks. But according to Marsh's recent European Cyber Risk Report, there's more work needed to improve how companies manage and understand cyber risk. One cause for concern is that almost 80% of organizations have only a basic understanding of cyber risk, putting them in a poor position to craft successful risk mitigation efforts. Meanwhile, IT departments continue to take primary responsibility for cyber risk in nearly two-thirds of organizations. IT teams are good at preventing cyber attacks, but they don't often assess broader risk implications. Instead, boards and risk management offices should take a greater responsibility for cyber risk. They're the ones better positioned to determine the operational and financial impacts of a cyber event. While the majority of European companies don't have sources of funding to cover a cyber event, of the one-third that do, only 12% are covered by insurance. The rest have likely secured alternate funding, such as lines of credit. More than 60% of respondents claim to have some sort of cyber response plan, but the report indicates that most of these organizations may only have a partial or general crisis plan in place, one that doesn't focus exclusively on cyber risk. It's both a surprise and a huge concern that more than three-quarters of respondents to this year's survey do not assess cyber risks for the suppliers or customers they trade with. Suppliers and external organizations are one of the key vulnerabilities to the safety of a company's network. While organizations can control their own networks, they often have a much harder time controlling those of suppliers and affiliates that they're linked to. These findings appear to leave organizations exposed to cyber risks and lacking security in IT systems where hackers might find a backdoor into their systems.